One of the things that I'll look at on a regular basis, everyone knows I like to look at a 3-minute chart, and I like to look at where we are relative to like a VWAP, right? Here's VWAP, regular trading hours session only. And I've got cumulative delta here as well. And here is just the NASDAQ. So what I will look for is, where is the NASDAQ relative to its 1, 2, and 3 standard deviation bands? I like this as a very good metric for an intraday short-term trader, because if the NASDAQ is consistently staying above a 1 standard deviation or a 2, or getting near a 3, and it's staying above VWAP, or vice versa, it's below it, that market will typically stay the strongest throughout the day. Let's take a look at an ES here to see where that is on a relative basis today. And when you look at that, and it'll take a second to pull up. So you can see here, the S&P is now weaker than the NASDAQ on a relative basis for today, if you're basing it upon this metric. The reason why I like regular trading hours, 3-minute chart, just opening range order flow VWAP, is because it shows me who's winning the price battles. Today, the NASDAQ is winning the price battles, probably because NVIDIA, I can't see. It's probably up again. Hopefully, I've got it in my portfolio, so I hope it keeps going up. But ultimately, when I look at that from that metric, a lot of people will say, hey, NASDAQ's up at 1 standard deviation or 2. I want to try and buy S&P. Well, why? And that's the correlation mistake I think they make. What you want to look for is the S&P and NASDAQ, is because they are correlated. I want to buy the weakness in the NASDAQ because they're the stronger market, right? And so if I'm looking at a short-term time frame, this is just one example of something I would look at, but you want to compare apples to apples, right? Don't say, oh, the S&P held my support that you have your level in, and the NASDAQ hasn't gotten there, and it's not derived from the same reasoning, the same indication. Then all of a sudden you're just trading 2 separate markets, and you're basically trying to find a reason to be in or not in one of these markets. Look at the markets that are for correlation on the same basis, because otherwise you're just really curve fitting that correlation. You're trying to fit it into your reasoning. And I look at this as a simple way to say, hey, S&P is a slight bit weaker than NASDAQ today. Let's go back to NASDAQ. I want to buy the weakness in the NASDAQ, because even though S&P might it really looks sideways, it's a sideways day. Look at how the NASDAQ's already getting close to 2 standard deviation. Number one, you wouldn't want to sell NASDAQ to come back to VWAP, or you wouldn't want to buy S&P to come up to 1 standard deviation. What you want is you want to buy weakness in the stronger of the correlation or the weaker.
The thing to think about is the dynamic of what's happening with that VWAP and those standard deviations. If that market moves higher, that VWAP is going to curve higher, the standard deviation is going to curve higher, and you're going to get that follow through in that direction.
Bingo. And when I say or the weaker, I want to make it clear, if I'm looking to sell in a bear market or in a weak market, I want to sell the weakest, and in the bull market, I want to buy the strongest. And it goes back to exactly what Mike had just said, because the potential is there greater. If you look at the S&P, we went back to it, you've got sideways standard deviation moves. Most likely S&P is a 2-way tape. I talked about that in my free note and everything this morning in the Discord. Market's really in digestion phase right now. NASDAQ's still looking to kind of run just because of the internal stock.